Hey, good morning, everybody. 7:30 a.m. New York time, London lunch. Today is Thursday, the 29th of January, 2015. This is your daily live Forex trading strategy session. My name is Wayne Bonnell. I'm the Chief FX Market Strategist for Traders Way. Thank you for being a client. Really appreciate it. We're going to spend a couple of minutes going over the fundamentals. Make sure you're caught up with all the news events that have occurred over the last 24 hours. Go over some old trade setups that we did earlier in the week and even last week. Then we'll go through the charts, do some technical analysis, set some new things up to end the week. A bunch of pips, hopefully, right? Let's get this party started. Trade your way at Trader's Way with Trader Wayne. Hey, good to see everybody. How you doing, huh? Springtime is here. The sun comes up over the horizon earlier and earlier. Feels weird to have daylight while I'm working. Weird in a good way, I guess, right? All right, left interest rates the same. Still came down like, I can put that chart up. Kiwi dollar. Okay. YJ says weak Aussie. Sure, it's all the same. But all right, so yeah, still bearish. I mean, not a huge shocker. It was expected. I think one or two clients here said that they figured they would lower interest rates. No, but you know, down, down, down. There's the result. 3 red candles in a row. This is a 4-hour chart. But if you look at it technically, drop, pull back, right? Drop, pull back. It's not freaking out, is it? Still acting fairly technically. You can see it just pull back to the 5, ride the 5 down to a lower low. That's a little aggressive, get a 382 or anything, but I don't know. Look at the bearish engulfing candle. So you get a little pullback into the 5, gone. Great. You know, with global economics, global macroeconomics, and the big decline in commodities, it's not just crude. Everything's coming down. Commodity currencies are generally weak. I think the commodity currencies will start to improve once we actually see positive effects out of European quantitative easing, because that spurs that economy, then it spurs the Chinese economy, which spurs the Australian economy, which spurs the Canadian economy, and so on and so forth, right? America can't do it on its own. So anyway, so it's weak. And what has our bias been for the dollar? Let's say just this week. Neutral to, all right, so look, it turned bullish, right? So anyways, that's the Bank of New Zealand. Interest rates are still 3.5%. Okay, and the reason it came down, though, is they did change their tone. And this is another theme that we've been talking about over the last couple of weeks. Because of commodity prices coming down, central banks are becoming more neutral. The ones that have already, you know, done the change their central banking policies in an easing stance and have benefited from a recovery. So like New Zealand's a great one, and the United States. And so I guess compared to other central banks, they're a little more hawkish, a little more bullish. Well, with the big crash in commodity prices, not so much anymore. They're not bearish, they're not dovish, but they've gone from, you know, they've gone to neutral. And so no interest rate hike for New Zealand in any foreseeable future. Boom. Okay. Remember, when it comes to trading fundamentally, it often is the change in sentiment that leads to a change in policy that changes the value of a currency. So just the fact that there's no hawkishness at all now. Nobody at the RB and Z is hawkish. So anyone that was trying to go long Kiwi is now out. So now you got a trend based on fundamental analysis. I mean, the technicals have been there, but now there's like sort of no short-term hope for the Kiwi, right? So whatever. So that's the same. And then someone mentioned here the Aussie dollar. You know, we've had this target now for weeks. We talked about it yesterday. A break below 80, pull back to 80. Look at our trade plans all written out. We got the first one and then the fallback in case one didn't work. We're way up here at 83 just, you know, last week with a target of 75. I know it's only 800 pips, right? But, you know, we're on our way now. Now we're at 78. It's not bad, right? 500 pips since last week. You say, well, Wayne, maybe that's a one-off. What about the USD CAD? That one has moved 500 pips since last week. The Kiwis dropped significantly. There's been some good trading as of late. Do you remember, I think it was early last, about 9 days ago, I guess, we started out with developing 9 trade plans based on nothing but the bias that the US dollar would gain strength. Who remembers that? Where I said, look, here's how I plan things out in regards to my trading bias. And I think I took a poll from everybody in the room. I'm like, are you bullish on the dollar? Just give me an answer. We took a poll. A bunch of people responded. There was a little more bulls than bears. So we said, okay, we're bullish US dollar. I created 9 trade plans. They all have been successful. Hundreds and hundreds and hundreds and hundreds of pips each. Just since last week. It's not that it's right that I'm preaching here, right? There's no glory in, there's only profit and loss, right? But what I'm preaching is that you set a bias and trade in the direction of your bias. Because even when your bias is wrong, it's easy to figure out that you're wrong, because if you're a bear and the price is making a series of higher highs and higher lows, look, you better get out. Wait for the next level of resistance and sell there, right? It's so much easier when you have a bias. You have a plan. You got to stand for something or fall for anything. Any little move, you're like, oh, I guess it's going long. I'll buy it. Oops, that failed. I guess it's going to go down, so I'll sell. That doesn't work. You can't chase price. Remember discussing the quote, Jim Morrison? Yeah, most people don't know Jim Morrison was a Forex trader as well as the lead singer to the Doors. And he wrote a poem about currency trading and not having discipline or a plan. Let me tell you about loss of God, wandering, wandering in hopeless night. Out here there are no stars, right? That's what trading without a bias is like. Heartache and the loss of God, wandering in hopeless night. Right? So that's the message I'm trying to get across. We had a simple plan. At the time, we didn't know if it was right or wrong. We had no inside information. We simply had a bias, set that bias up on 9 different, I think it was like 6 currency, 3 commodities, and they've all moved very significantly. But all we did was have a bias. Right? That's all I'm asking from you. Do a little homework, make a decision, and then trade in the direction of the decision, right? Okita says, you know, from the higher time frames, currency strength. All right, 2 ways of doing this, and I like both. Fundamental analysis of global macroeconomics and central banking policy. 2, long-term charts. And I consider 4-hour and daily charts enough. So if you're looking at a chart making a series of higher highs and higher lows, you make a decision on the trend, trade in the direction of the trend. I think if you are counter trend trading, there are times when it's appropriate, but more often than not, it's double the risk for half the reward. Sometimes but most of the time, I believe it's double the risk for half the reward. I would rather you trade in the direction of your bias all the time. Okay? Anyways, so Aussies come down a ton of bricks too, right? So that's somewhat related to New Zealand. They're now dovish. They were a lot more hawkish than other central banks. Well, now they're dovish, and other ones are, or they're neutral. Commodity prices come down because it's another sign that globally things are not as good as we'd like them to be. Okay? You need to study macroeconomics. Yeah. Yeah. Now, I'm self-taught, but I think having a solid education is good. So teach yourself, read a book, go to school. So anyway, so alts come down. You know, the RBNZ has analyzed the global market and their position in the global market, and they see less inflation in their future, aka falling prices of commodities in their commodity currency, yada, yada, yada. All right. That's also bad for Australia. That's also bad for Canada. It's also bad for South Africa. It's also bad for Norway. Simple commodities, right? Then you look for correlation. Why are they correlated? Because they're all commodities. So anyways, they fall. Japanese retail sales, no so good. Actually, negative number. Japanese retail sales have fallen for 3 months in a row. Well, wait. I thought they were trying to increase inflation. Can you get inflation when people are not spending money? The rate of their spending is falling every month. Is that a good way to jack up prices and create inflation? Does that show the demand curve rising or flattening? Yeah, oops. Japan can't like that, right? Tisk, tisk, tisk. But you know the yen has strengthened over the last, since December, right? Over the last 5 weeks. Trying to get that north, the USD yen north. But anyways, that's not so good. Okay. Now let's talk about the FOMC. Do you remember that? FOMC, not a large change in policy there, which is expected. We talked about, they might change some minor things, but they're not going to, they're not going to back out of what they're doing and change policy, but they do have to recognize the fall in commodities, right? And maybe even mention, the ECB's quantitative easing, maybe? I'm sure it was discussed, right? We'll find out in the meeting minutes. Okay, but they did reference international developments, quote unquote. That's new. That's a change in their policy statement. So does that reference quantitative easing or the the self-inflicted wound of Greece? Talk about a tragic comedy, huh? German CPI still negative and falling. Oh, come on, ECB, a little bit late. How could Germany have negative CPI? I mean, seriously, a little late, dude. Housing prices in the UK improving. Yeah, thank you, London. So no, right now nobody can live in London. Well, no one from the UK, anyways. Okay. So that's good enough for the fundies. I hope you don't mind. I think I spent a little too much time on that, but I hope you don't mind the open conversation. It's Thursday, as you can see. We got the jobless claims coming out. Again, I don't think it's the biggest thing in the world to worry about right now. Let's review the status, the current status of the Forex market. British pound, yeah, moderately weak. Euro, quite strong. Swiss franc, very weak. Japanese yen, very weak. Dollar, moderately strong. Aussie dollar, very weak. Canadian dollar was very weak, but is trying to rebound here at its market open. It's also at a big psych level, I think, right? Still, what is that up there? Is it 26? My screens are so far away, sometimes it's hard to see the numbers. Need binoculars. It's what happens when you have 18 screens. So CAD kind of trying to rebound, and Kiwi very weak. So again, the three major commodities I follow the most closely: Aussie weak, CAD weak, Kiwi weak. Okay, the only one showing strength right now is Euro. You know what I like about that? It means I could sell it today or tomorrow. How can I sell high if it doesn't go up? Does that make sense? Like I'm a bear on euro dollar, but I can't sell low, right? Why would I sell low? So I need to sell it high. So I'm happy when I look at it and say, what? The euro's strong? Pfft, great. Nice. Kind of idiot is buying euro, right? What kind of monkey head is buying euro? Good. Well, the market's mispriced. Time to set it straight. Right? So, are we in a channel here on the short term? How do we want to play it? That means this might be resistance. How does it look on the hourly chart? No so bad. No so bad, Mr. Wayne. Right? Not so bad. It's way more way more overbought than oversold. What is that? About 75% overbought. A little stochastic kiss there. Right? So might not be ready right this second, but it might be setting up. So you drop into a smaller time frame like the 15. Yeah. Still no lower low, but you can see the stochastic falling, which means it's measuring the candles in here, right? And price is having difficulty making higher highs relative to the previous candles. Okay, look at this huge, I don't even call that a double bottom. Breakout retracement 1, 2, 3. This is something I believe we covered yesterday, wasn't it? Or maybe the day before, had 1, 2, 3. Right? Bottom, bottom. And the next important thing is the high. This high is higher than the previous high after the double bottom, right? Or sorry, it's actually this one. All right. Double bottom. This high is higher than that high. Comes back. Long. Okay. Makes sense? Let me just mark it. You can go back and watch the video. If it wasn't yesterday, it was I'll just mark up the most important ones, right? First thing that you notice is a double bottom. What kind of candlestick pattern is a double bottom? Bueller? It's called a reversal. Okay. So as soon as you get the double bottom, what you want to do is look for the next top, the previous high, because the downtrend is supposed to be a series of higher highs and higher lows. So if you can get a high higher than, well, you know, you're not supposed to have a higher high in downtrend. You're only supposed to have lower highs. So you identify the previous high, and if you get a high above that, now you have a series of no lower low and a higher high. What follows a higher high? A higher low. So you should prepare for that. So what I was showing you, I think it was yesterday, when you do that, you fib the new high to the low, and you also look at the previous low. Sort of, you can use this area, and it's not a bad idea to also recognize if it's there, this one. Either way, it's no big deal. Okay? Your sweet spot is somewhere between 3A2 and 618 Fibonacci retracement. That's another way of doing it. I mean, they're all the same to me, but okay. So you're kind of looking at this zone. Oops. Okay. So your sweet spot, somewhere between the 3A2 and 618 Fibonacci retracement. Okay, and that's the logic. So now you get the higher low, higher high. So, you know, there's a little shot there. A little shot there. About the London Open, I suppose. Okay. But now I hope this comes around, and I actually want this to come down. Two reasons. One, I'm a bear. Two, we're in a bearish channel. Okay? So some might see this on a 15-minute as divergence. Okay? While price up there is doing a high. So a bear is going to like that, and I am a bear, as you know. I mean, come on, I've been a bear since November. No, November, a year ago, November. It's been a while. It's been a while. I've been a bear on euro dollar since the taper, and I think that was November 2013. Okay, that was the day I became bullish on the US dollar. Now, the previous, I don't know, 2 years before that, I was bearish on the US dollar. I spent 6 months teaching people to be prepared for dollar strength, and that it would happen on the day the taper started. So the day they announced the taper, I became a bull in the US dollar. Now, the next piece of the puzzle was to get the ECB to actually admit they have a drinking problem, or at least a economic problem. And that wasn't until June, I think, right? We thought it was going to be March, but it actually happened in June. And that was the day both, you know, fundamentally on both currencies, the euro dollar was set to fall. We were at 140. I suggested it would go to 120, and everyone laughed at me. As they always do when I make a 2,000 pip prediction. Sure helps no fundamental analysis, I'm telling you. All right. So anyways, I'm still bearish on this. I don't think anything's fundamentally changed. So if I look at something and I say, hey, euro dollar looks strong, euro looks strong, I'm happy, I'm smiling ear to ear, because some idiot is buying it. And I have conviction and discipline to trade in the direction of my bias. So if it's heading up, I'm looking for resistance, I'm waiting for bot, and I'm going to drop it like it's hot, like a ton of bricks with 2 hammers on top. Goodbye, euro. Because that's my job. I'll wake up in the morning and it's 1:45. What do? I sell the euro. I sell the euro. Been singing and dancing like that for years. Okay? Hey, dude, what do you do? Oh, I wake up in the morning, pre-London, I sell the euro, and I go back to bed. What do you do? Oh, I'm marketing management. Okay? Parity? Hey, how about 80, Kareem? Who cares about parity? How about 80? Let's put it this way, Kareem. I will be bearish on Euro USD until something fundamentally changes. Price doesn't matter to me. I'm not in charge of price. I'm not that big of a trader. The sum of all market participants will set the price. It's an efficient market. It'll be set. What price? It's not my problem. But I'll tell you, we need to see inflation out of Europe. And when the ECB says, whoa, 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 things are picking up so fast and so furiously, so many Spanish people have jobs, it's unbelievable, we better throttle back on this quantitative easing because inflation is so high and jobs have improved so much. So on that day, when it's announced by the ECB, that day I will no longer be bearish on the euro. I'm done, bro. Right? On the other side of the equation, when do I become neutral on the US dollar? The day they stop raising interest rates. Well, we haven't even started. I got some time, my friend. So if you look at it, if I'm right on that, what's wrong with 80? Forget, a dollar. Forget it. So that's my job. And the tough thing with, I would say one of my greatest weaknesses, excuse me. Sorry, yesterday was a 2-cigar day. And 6-inch long, 60-inch ring gauge, or 60 ring gauge, 2 of those, it's a lot of cigar. Anyways, I'm usually way too early. So that's something for me where I find over the years, I put it all together and it seems easy to me. And I'm dumbfounded how long it takes the rest of the market to get together and make it happen. And by the time they do it, I'm like, I've lost 99.9% of my patience. I used to lose my patience. I'd break the barrier and suddenly I'd give up, right? And then finally, eventually, the trend that I'm expecting kicks in. But I've already kind of given up and backed away and started dating new trends, right? So now I'm sort of learned patience over the years, and now I can hang on, but I only have 0.1% patience left by the time these things kick in. Great example is the ECB. I mean, it took them 9 months to get on the clue train. It's amazing. They were Maduro, Ron. Yeah. Well, I was outside enjoying a nice spring day and a nice bourbon. And then like 2 hours later, I get a call from a friend. He wants to meet up. I'm like, I never meet up with my friends. I'm like, oh my God, he's either been fired from his job or his wife has left him. I'm like, oh, this is going to be another cigar. Yeah. So anyways, so when I'm wrong, it's usually that I'm so early that it becomes frustrating. And I'm learning to be patient, and I don't know why it takes market participants so long, maybe because there's so many, who knows. So we'll see. But to me, it all starts with fundamentals. The rest, the technical analysis, just puts me in and takes me out of trades. Easy. Not a problem. Technical analysis, I know it's supposed to like foresee the future, but it helps you understand the, I think, the shorter term behavior and sentiment of market participants, which I love. I'm not knocking quantitative or not knocking technical analysis, but if you use fundamentals, the way that the market behaves, trend wise, is absolutely unbelievably straightforward, easy. It's harder for people to learn. But anyways, I digress. All right. Does this look opportunity to put money into the market, start trading aggressively? Nah. Looks kind of range bound to me, right? Mostly sideways. Low, 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 high, 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 high. Well, if you're going to do anything, do it at either the support or the resistance that you choose. Just for fun, you can do it this way, right? Get rid of the that. All right, so if you're at support and it's oversold, buy it. If you're at resistance and it's overbought, sell it. If you're stuck in the middle, take a walk. Okay? Take a look at USD yen. Still stuck here. Look at the pens. You can see I still want this sucker to go up. But it's taken a long time. Same thing. If you're at support and you're bullish, buy it. Okay? Was there an opportunity yesterday? It's not the greatest price action in the world, but the answer is yeah, there was an opportunity off of a weekly pivot. Wasn't 1700, wasn't radically oversold. You know what I mean? Namaste, Nuno. So, right? Do you think somebody's going to sell it at 18? It's actually 1820, which predicts an 80-20. So if someone sold it there, the next one is going to be 80, which is, what is that, about 80? There we go. So down in here. Yeah, so yen coming back in for strength. Well, that might be an opportunity on things like Aussie yen, Kiwi yen, CAD yen. Could be a rabbit, could be. So let's take a look at the yens, huh? Okay, pound still looks neutral, not at support, not at resistance. Euro yen, Not at support, not at resistance. Kitty cat? This is difficult because I would want to sell it, but I have it marked as hardcore support. Wouldn't it be interesting if we got a 2155 crossover? Which would mean the MACD crosses above the waterline, as you know from our MACD lesson. Wouldn't that be interesting here? Now, even though CAD is really weak today, well, what about tomorrow? What if we sit and just never break lower? And we're caught on the weekly S1. Well, maybe we're long this next week, right? What if things change? Commodity prices, what if oil goes up? The yen weakens. I don't know. I'm not ready to buy it. In fact, I was thinking this would be falling, but I can't sell at support. So I could at least do one thing, set up a long and hedge it with the binary because it's still a downward trend. But if you want to be long-term long in a downtrend, you go long the cash and short the derivative and reduce your risk by 40%. That's why I like traders, because I can long the market on my Forex charts, right? Throw down a binary option on the short side of the equation using a binary option and be able to manage that trade on my MT4 account along with my other trades and positions. Loufle, tell your mum, right? So that might be interesting. Or you drop into a small time frame and try to find resistance there and just manage your stop close. So the way to do that, we connect these lows. There's one there. There's one there. So I'd call that my sell zone. Wait for it to be overbought on the 15. Well, it looks like it came up and actually touched it. So 5-minute cycles down. This is particularly important to be doing this at the open of a market. Now, technically on this time frame, this is now a 5-minute chart, we've made a higher high, so someone might buy this higher low. Off of this now, what used to be resistance is now support. So, therefore, over the course of the next half an hour, if it does rise back up and then makes a lower high with a soak cycle that looks like this, then you would drop it like it's hot. Right? Jam a stop, take a walk. Okay? Because I think a bull is preparing to buy this right now. Okay? Interesting thing is if this does head down, because of the prevailing trend, has a very real chance of making a lower low, and the next level of support isn't down till 91, but we're at 94. So it could be interesting. So pick a team. Buy if you're a bear, or wait for it to roll over if you're a bull. And not a gullible either, right? I think a lot of commodities are going to be the same. Obviously, they've been hit so hard that not likely going to find them overbought. They're oversold because everybody, right? It's not complicate things too much. But some pullback would be nice. So again, we're not at resistance, so you can't sell it. And we're approaching support. So if you're looking to at least short-term long it, I would start setting it up now off of the weekly reversal area. Okay? Okay? So be patient, grasshopper. So, if you're going to sell it a little higher, at least fib this, and even that's not great because usually what you should be doing is looking at the higher fractals, right? And you really want to be up here, like I was showing you, it's an orange line. You kind of want to be up here. That's not going to happen. So, what do? Well, you can't sell at a weekly reversal pivot. Come on. Have some discipline. Can't sell at a weekly reversal pivot. Right? But what if it reverses, even on the short term? What if it reverses for 3 or 4 hours? Hey, nothing wrong with that. So maybe you look for a long on a smaller time frame. Considered a scalp. Scalping off of the reversal, weekly reversal zone. It's a counter trend trade. Double the risk for half the reward, but hey, if you can pick up no so bad, right? Rob says divergence on the Stokes, yeah, kind of like that. And so price made a lower low and stochastics made a lower high, or no, a higher low. Yeah, okay, sure. I don't argue that. Back to the Aussie. That's where we are now with the Aussie. You can see our trade plan from what, a day ago? Came down. Yes, it made a 382, which predicts a 1618 extension. Look where it consolidated at the 1618 extension. Came back, retraced, and now is at the 2618. But the way that you would have redrawn this is like this. So it's just, a 50% back down. So it's, again, now since you can probably call this a 50%, it would predict a 1382. It went to the 1618 and then tested the 1382 on the slack. Okay. So nice little Fibonacci trading there. But let's kill that. The other way of looking at this is, let's say, we came up to resistance, came down to support, it held, it broke. This is called a second chance trade. Okay, and that's all it is. So you break, retest, right? Roll reversal, second chance. Down, up, down. Okay, so beautiful price action type trading. Okay? Sorry about the distractions today. I know we talked about fundies and then I got distracted and talked about a couple of other things. But I hope you got some technicals out of this as well. Okita says that's what I like about you. Yeah, use it all. Fundamentals, technical, price action. Yeah, what else is... I've always felt from day one that you should have a healthy balance of technicals and fundamentals. Cool. So I pitched an idea to Traders Way yesterday about doing a 3 or 4 hour workshop. So the cards are on the table. We're under discussions. We'll see what we can do. my idea that I pitched to them is like it should be for those that have live accounts. Because obviously that's the reason we're doing this at Traders Way, right? I'm trying to share as much as possible. I'm trying to teach as much as possible. We'd like you to fund a live account and trade successfully for years and years to come. That's why I'm here every day. So I thought, well, maybe if you're on a demo account and you're enjoying the MT4, you're enjoying the binary platform, and you're thinking about choosing a broker to base your successful Forex trading career, well, why not the one that's investing into your future now, up front, before you're even on a live account? So if you're on the fence, if you're on the edge and you're thinking about it and you're enjoying the demo, you like these events and you want them to continue, fund a live account, and then maybe I can get we can get together a training weekend, and I'll do my best to teach you everything I know. So it's just an idea right now, but you inspire me. Peace on earth. May the pips be with you. May your profits be above average. Thank you for coming to these events. They're not on, we don't do them on Fridays. Monday. So peace on earth. May the pips be with you. May your profits be above average. And thank you for your loyalty. I appreciate it. Cheers.